Hello everyone, welcome to this lesson. Today I'm going to complete the debtor's journal. A debtor is someone that we sell to on credit, and in this lesson the school is a customer of Calibre Education. The school has an account with Calibre Education, and Calibre Education is going to sell to the school on credit. So the school is able to buy products and pay later. So there I've written, money please. Calibre Education is going to get money from the school at a future date. Find a nice quiet place to listen to this lesson, and thank you once again for purchasing this lesson. By the time we're finished, you're going to be an expert on the debtor's journal. I will also cover a little bit of the debtors ledger, so you're going to learn quite a bit. I'll look at the documents involved in recording transactions which relate to a debtor. So there's lots to look forward to. Enjoy the video. So here we have the accounting cycle, and let me just show you what you're going to be doing. Remember, we're going to be looking at credit sales. The source document that will be used to record the credit sales is an invoice. From the document, we're going to post to the debtor's journal. Then from the debtor's journal, we will post to the debtors ledger and the general ledger. I'm not going to go into detail in the debtors ledger, but I will show you the account of our debtor, the school, and here are two staff members, Caleb, our little entertainer, and Mommy, the auditor, the person who checks the videos. There they are, they're quite happy. But we're going to be concentrating on the debtor's journal and posting from the debtor's journal to the general ledger. This is a typical transaction that goes into the debtor's journal. Sold goods on credit, sold more stock to the school. We look at a discount that was given, trade discount. Some more stock was sold. Trading inventory sold to the school. So we're going to have a look at credit sales here. And all these transactions, as you know, will be recorded on a source document. There's a picture of an invoice. I will go through the details of an invoice. From the source document, the information goes to the journal, the debtor's journal, and from the debtor's journal, you know, we post to the general ledger and actually the debtor's ledger as well. But our focus today is taking the information from the debtor's journal to the general ledger. So that's what we're going to be having a look at over the next 40 minutes or so. This document, a tax invoice, records a credit sale. It could have said, yeah, credit invoice, but this is a document that is going to record all the sales that we make to the school. Remember, when we sell an item on credit, there are terms and conditions involved. The school will have to pay us within 30 days of the statement being issued. This document here was issued by us, Calibu Education, and the original copy was given to the school, our customer, and the details of what was sold to the school is on the document. The quantity, what is the price, the VAT involved, and the total amount to be collected. There you can see in green what's required by revenue services to make this an official document. So we got the details of the buyer, the details of the seller. It must say tax invoice, document number, the date of the invoice, the number of items being sold, what items were being sold, the unit price, the amount, and importantly, the terms and conditions of a sale on credit. That will all be on this document. And Calibu Education issues the original to the school, and Calibu Education will keep the duplicate invoice to record the credit sale in the debtors journal. And this is the document without all the green markings. You can have a look at it. There's all the information that's required by the revenue services, terms and conditions, the amount. Just note here, the school is a VAT vendor, and so is Calibu Education. So VAT is charged on the tablet that was purchased by the school, and in turn the school could claim input VAT because they're dealing with a VAT vendor. But this is the document that records a credit sale. These transactions took place for Calibu Education for the month of February. Remember, all amounts include VAT unless otherwise stated. For example, there on the 9th, the amount excludes VAT, so we're going to have to do a calculation there. I've already identified which transactions go into the debtors journal, so I've marked it in green. Sold goods to the school on credit. Issued invoice 23 for 3,200. So there's a transaction on the 9th that needs to go into the debtors journal. And the debtors journal is a journal that records credit sales. There's another transaction on the 13th. There's a sale for 25,000, but the school was given a trade discount of 5%. We will check out to record that. Then just another credit sale, 7,500. That amount includes VAT. And let's have a look here. On the 18th, there's another sale on credit for 6,540. So there are 4 transactions that need to be recorded in the debtors journal. All these other transactions are in other lessons on the creditors journal, the cash book payments, the general journal, creditors allowance journal. Check them out, but I'm going to sell this as a package where all the journals are included. And then there were more transactions on the 28th of February, but none of them needed to go into the debtors journal. For this month of February, there were no more credit sales. So now what we need to do is we need to look at recording these transactions in the debtors journal. I extracted all the transactions which relate to the school for the month of February, just to show you something. So there were credit sales, there were returns from the school, there was a payment by the school, there were more sales. We charged courier costs to the school's account when we delivered some items to them. Now all these transactions relating to our customer, the school, took place in February. But we're only looking at, in this lesson, the debtors journal, the sales journal. But remember I said I would just show you what the school's account looks like in the debtors ledger. These transactions here were all posted to the school's account in the debtors ledger on a daily basis, so we could keep a running balance of the school's account. It might sometimes feel like you're going upriver, and sometimes you are, but the journey is beautiful. Just thought I would share that. Beautiful scenery. Here we have the debtors ledger, and we will eventually deal with the debtors ledger, but all the transactions here for February are recorded in the school's account in our books, Calibre Education's books, and there's a column here for balance, and a running balance is kept of what the school has paid us, what they owe us, what is the balance at the end of the month. This here is an example of an account in the debtors ledger. We will do a debtors ledger, like I said, in the future. Look out for it. Do you also get cows roaming around your streets on your front lawn? They've come for the lesson. Remember, all credit sales get recorded on a tax invoice. So the transactions take place. All transactions are documented on a tax invoice. I think I've dealt with the tax invoice, the document, enough. Don't forget, if you asked what document is used to record credit sales, you say a credit invoice or tax invoice. And remember, we're in the books of Calibre Education, and Calibre Education will issue the original to the school and keep the duplicate. So the answer, what document is used by Calibre Education to record credit transactions, you will say tax invoice duplicate or invoice duplicate, because the original was given to the school. The tax invoice is used to record the transactions in the debtors journal. That's what we're going to be doing. And if we look at the column headings here of this debtors journal, we've got document, so we're going to put the invoice number under document, the day the transaction took place, the name of the debtor. We're only dealing with one account holder, the school. At the moment, the school is the only debtor Calibre Education has. The Folio came from the Debtors Ledger. The school was debtor number 1, D1. So there's a cross-reference from the journal to the Debtors Ledger. There's a column for debtors control. Remember, debtors control is a general ledger account. I will show you the general ledger shortly. And the debtors control account is a summary of all the individual debtors. Now when we make a sale, included in the selling price is VAT, which we collect on behalf of Inland Revenue, and it is in our case 15% VAT. So we need to calculate the VAT. Then we get the sales amount, the credit sales amount, which excludes VAT, and we're also going to calculate the cost of sales. Then all this information here, the totals of the columns, are posted to general ledger accounts. Now the debtors journal records credit sales. In my next video, but I'm just going to point it out here, we are going to look at a debtors allowance journal, because if the school was unhappy with items that we sold to them, they will return the items to us, and that will be recorded in the debtors allowance journal. Remember, you might know this journal as the sales journal and this journal as the sales returns journal, but the debtors journal records credit sales and the allowance journal records returns. We're going to look at the debtors journal as I've mentioned before. While you have the two journals in front of you, the debtors journal and the debtors allowance journal, I just want to point out, when we make a sale, we claim output VAT. We charge the debtor output VAT, but if they return the items, we reverse that output VAT by debiting input VAT. All these entries in the allowance journal are the opposite to what's in the debtors journal. More about that, I'm just introducing it so you're aware of that fact. Fortunately, the school normally pays us on time. There you can see the cash in the background. Before you open up an account with a debtor, a customer, you need to do a credit check and see if they're able to pay back. Are you going to allow them credit to buy now and pay later? Let's have a look at the transactions we identified, the credit sales for the month. So on the 9th, sold goods to the school on credit, issued invoice 3,200 excluding VAT. So we've got the document, invoice 23, the 9th, the debtor is the school, the debtor's folio is given to you, D1, it will be given to you, and the amount of the sale is 3,680. Now it says 3,200, but what we need to do is we need to include the VAT, because the school is going to pay us the price which includes VAT. So the exclusive amount was 3,200, and if I want to include the VAT, I say multiply by 1 plus 15%, which is 1,15. 15% as a decimal is 0.15, and 1 plus 0.15 is 1.15. So 3,200 multiplied by 1.15 gives us 3,680. The VAT amount is the inclusive amount less the exclusive amount, gives us 480. And if I want to now get the sales figure must exclude VAT. I say the inclusive amount divide by 1,15, or you could just fill in that amount from the transaction, the details of the transaction. Because if you see, the transaction says sold stock to the school 3,200 excluding VAT. So the sales amount always excludes VAT, and it's given to us 3,200. I just put that little calculation in there. The inclusive amount divide by 1,15. And if I want to get the cost of sales at the point of sale, trading inventory is expensed, and we open up an account called cost of sales. You might have seen my cash book receipts lesson. Obviously there's cost of sales there, but it is a cash sale. We're looking at credit sales. For me, they could have called this column cost of sales, trading stock, or trading inventory, because the total of this column you will see will go to two general ledger accounts. One, cost of sales, and two, trading stock. Calibre Education uses a markup on cost price of 40%. So in order to calculate cost of sales, we take the sales amount, 3,200, excluding VAT, and divide by 1 plus 40%, which is 1,4. So 3,200 divided by 1,40 is equal to 2,285 and 71 cents. So there's the transaction on the 9th. Sold goods to the school on credit. Issued invoice 23 for 3,200, and they said that excluded VAT. The debtor will pay us the amount including VAT. We will pay over to SARS the VAT amount, 480. The sales amount is the exclusive of VAT amount, and the cost of sales is we need to take off 40% because there was a markup on cost price of 40%, and that will give us the historical cost of the trading inventory, the stock that we sold. Next transaction, I'm going quite quickly as I assume you have some previous journal knowledge already. If you watched my previous lessons. So let's move on to the next transaction. Sold more stock to the school on credit for 25,000 less trade discount of 5%. Now trade discount, we've given the school trade discount because they're a great customer or they've bought in bulk, but we're giving them 5% off. And 5% off, I've said 25,000 times by 95% gives me 23,750. Remember, you could have used a different method. You could have said 25,000 minus 5%. As long as you're getting to the 23,750, then the VAT amount is calculated by saying the amount after the trade discount, 23,750, multiplied by the VAT fraction, 15 over 115, gives you 3,097 and 83 cents. and the sales amount is 23,750. That's after the 5% trade discount, less the output VAT, and the amount is 20,652 and 17 cents. Now, before I do the cost of sales, I just want to clear this because this is a very important little point. The stock, regardless of the trade discount, still costs the same. So even though the school was given trade discount, we can't calculate the cost of sales on the amount after the trade discount. We need to go back to the amount before the trade discount. The sale was 25,000. Now, in order to work out the cost of sales, I say the amount before the trade discount, take off the VAT, divide by 1,4, 1 plus the 40%, and that gives us 15,527 and 95 cents. This little section that I'm highlighting here, it could be a trick question. How do you calculate the cost of sales? You take the amount before the trade discount. You take off the VAT by dividing by 1,15, and you take off the markup, which is 40% on the cost price, by dividing by 1,4, 1 plus 40%, and that equals 15,527 and 95 cents. That is important, that calculation. I did one like that in the cash book receipts as well. So go through that again if you need to. You stop the video and you go back to where I'm talking about this transaction and look at it very carefully. Next transaction. It says here, sold stock to the school on credit. Nice and easy. 7,500. And remember, all the transactions include VAT unless otherwise stated. So the invoice, I'm just working here in chronological order, number order, 23, 24, 25. Remember, we Calibre Education, we issue the original and we use the invoice duplicate to record these transactions in the debtor's journal. Remember, a debtor, same as accounts receivable. So on the 15th, the debtor or the account receivable is the school, the debtor, the Folio D1. The amount including VAT, they gave us 7,500. To calculate the VAT, we say 7,500 multiplied by the VAT fraction, 15 over 115. If your country has a different rate for VAT, it would be, let's say for example 10%, it would be 10 over 110. If it was 20%, I think I read the UK, 20%, it's 20 over 120. Right, so we calculate the VAT here in South Africa. 7,500 multiplied by 15 over 115. It's 978 and 26 cents. The sales amount, remember this column sales, excludes VAT. So we say 7,500, the VAT inclusive amount, less the VAT, the output VAT, and that gives you 6,521 and 74 cents. And the cost of sales here we can do quite easily. I'm just going to take the sales amount excluding VAT divided by 1,4. There was no trade discount here. It was a straightforward credit sale, 7,500 including VAT. And the last one, trading inventory sold including VAT, 6,540 to the school. Invoice, next one, 18th, debtor the school. The folio of the school is D1. Under debtors control, 6,540, the amount including VAT. The VAT amount is easy, 6,540 multiplied by 15 over 115 equals 853 and 4 cents. And if I want the sales amount excluding VAT, I could say 6,540 minus the 853, but I'm showing you a different way. To take the VAT off, I divide by 1 plus the 15%, which is 1.15. 6,540 divided by 1.15 is 5,686 and 96. Then actually to get the VAT amount, I said 6,540 minus 5,686 and 96 gives me 853 and 4 cents. So now what we've done is we've done the credit sale on the 9th, the 13th, the 15th, and the 18th. All these transactions, these 4 transactions, were recorded on an invoice. The invoice was used to place the information in the debtors journal. Next, the debtors journal will be used to post the entries to the general ledger, to the ledger accounts. But before we go there, I'm just going to show you this completed journal, neatly presented, not with all these markings. That will be coming up shortly. And here it is, this beautiful document or journal, the Debtors Journal of Calibre Education. There are all the column headings, and there are the 4 transactions we just completed. And we total up each column, and that information is going to be taken to the general ledger. We're going to debit and credit accounts, and I'm going to use the rules to show you why each account is debited or credited. But it's very important that you always practice what you've learned. Understanding. You can't learn bookkeeping or accounting parrot fashion. You need to apply the rules that were put in place most probably hundreds of years ago. Nearly time to find some sea sand to walk on. I've included, as I have in all the journal lessons, before we post to the general ledger, I'm just showing you an extract from the trial balance. And the reason I'm showing this to you, I just want to point out these Folio references. For example, if we look at trading inventory, it has a Folio B6. The statement of financial position, more about that later, used to be called a balance sheet. So these Folio references here are still B, which stands for balance sheet, which is actually the statement of financial position. But every single asset, owner's account, and liability have B folios in our example, and all the income and expense accounts have N folios, standing for nominal account section. So when we do the general ledger, each general ledger account will have a folio, and I've taken the folios from the previous month's trial balance, the trial balance for January. Remember, we're doing the transactions for February. So my point is, all the folios I've taken from the previous month's trial balance. So if you get asked a question in a test or exam, look for the folios. If you're not given the folios, obviously you can't fill them in. But a good place to look for the folios for the ledger accounts is a trial balance. I love to see growth. This is you guys when you started the lesson and you passed here, and that is you. Thank you for investing in yourselves. You're going to just grow and flower. All the transactions for the month of February are now recorded in the debtors journal, and the next step is to take that information and we say post it to the general ledger. One of the purposes of a journal is to take the load off the ledger. So we don't take all these individual transactions and record them in the debtors control account in the general ledger. We take the total. So we're going to post these totals to the general ledger. All the accounts in the general ledger that are affected in this case here by credit sales. So let's have a look first of all at the cost of sales column. Now at the point of sale, our trading inventory that we are selling is expensed. We no longer have trading inventory on hand to the amount of the sales that have taken place at cost price. We've calculated the cost of sale for every sale, and now we need to take the information and place it in the general ledger. Like I said earlier, I would have called this cost of sales trading inventory, this column, because the total of this column, the information goes to two accounts. Number one, a new account, cost of sales. Like I said, the inventory, when we get rid of it, is expensed to show that there was an actual cost to the sale. And the reason why there's a cost of sales account now, it enables us to calculate the gross profit of Calibre Education. More about that a little bit later. We also need to record that the trading inventory that we sold has left the building, and the stock on hand is now less because we've sold the stock to the school. So this information here, the total of this column, is taken to two accounts. Let's go and take the information to the two accounts. So cost of sales will be debited and trading inventory will be credited. Remember, I said you cannot just learn this account was debited and that account was credited, because eventually you will make a mistake. Every time you debit or credit an account, you need to apply the accounting rules. Now, trading inventory, we've learned earlier, is an asset. Stock has left the building to the amount of 26,534 and 16 cents. We calculated that amount after each credit sale, and we post the total to the ledger account. So let me say that again. Trading inventory is an asset. We need to record the fact that the asset to the amount of 26,534 and 16 cents has been delivered to the school. It's no longer on our shelves. So we need to show that in our trading inventory account. The value of the stock has decreased. A decrease in assets, the account must get credited. Remember, the right-hand side, that's a R, right-hand side of a ledger account is the credit side. That is why this entry is recorded on the credit side. Decrease in assets, the rule says credit the account. And if we look at just the column headings on the credit side there, we got the date, 2024 February, the last day of the month. February is a leap year in 2024. The contra account affected by this transaction is cost of sales. Where did we get the information? From the debtors journal. And the amount is taken from the total of the cost of sales column in the debtors journal, 26,534. So we did this over here. In green, I put those blocks under the cost of sales column, and we went and credited trading inventory. Decrease in assets. The rule says credit. Now that is the credit entry, and for every credit there's a debit. Remember, at the point of sale we expense the stock, and we went and debited cost of sales. Now cost of sales is an expense. The expense has increased. The rule says an increase in expense, you need to debit the account. And the contra account of cost of sales is trading inventory. And the contra account of trading inventory is cost of sales. I'm taking some time to explain this, but it's something that catches people out quite often. Now I'm going to cut a long story short. I'm giving you all the explanation and the understanding, but I'm going to show you this quickly. That amount there in the cost of sales column, it goes to two accounts in the general ledger: trading inventory and cost of sales. Trading inventory is credited, decrease in assets. Cost of sales is debited, increase in expense. The two accounts are linked. They are contra accounts. Trading inventory was credited and cost of sales was debited. Watch that again and again if you need to. Now also on this page, I have another account in front of me that I haven't dealt with yet, debtors control. Now the control account, remember I'm looking at the accounts in the general ledger. Debtors control is a summary of all my individual debtors. In this exercise, Calibre Education has only one debtor, the school. So this control account represents the school. We have sold that amount in total to date. In fact, this was only for February. We've sold to the school 41,470. Remember earlier I showed you a debtors ledger that is different to a general ledger. A general ledger has all the accounts of the business. A debtors ledger has all the individual accounts of the debtors. So I'm now looking at the debtors control account. We take the total and we post it to the debtors control account in the general ledger. We classify the debtors control account. From a previous lesson you learned a debtor is an asset. When we make a credit sale, the debtor owes us more. An increase in assets, the rule says debit. Debtors control is an asset. We debit the account, and on the last day of the month we take the total of the column 41,470 to the debit side of debtors control because we had an increase in assets. The debtors owe us more. So hopefully that makes sense why it's entered on the debit side of debtors control. Increase in assets. Now I want to point something else out to you. The contra account in this case here, under details, there are two accounts, sales and output VAT. Debtors control, I'm going to make this into a T. Debtors control was debited 41,470. There were two contra accounts, sales and output VAT. And I'm going to scribble on here quickly, but it's important. Sales, and I've got another T account, output VAT. Debtors control was debited with 41,470. Now, sales is going to be credited, and so is output VAT. Output VAT is 5,409 and 13. Sales is 36,060, and let me check the cents, 87 cents. There it is. Those two amounts added together equal 41,470. So in sales will be the sales amount, and output VAT will be the output VAT amount. I'm going to do those two accounts, but I just want to point out here why under details in the debtors control account there are two other accounts. For your debits to equal your credits, the total amount debtors control includes VAT, and there's sales and output VAT. Those two amounts will equal 41,470, which I pointed out in the journal. And just before we move on, I will point it out again. 41,470 is equal to 41,470 is equal to output VAT plus sales. Debits equal credits. There we go, debtors control. Let us move on. I hope that all makes sense. We've taken the information from the cost of sales column to cost of sales and trading inventory. We've posted that information. We have done the debtors control account in the general ledger. Now we need to do the output VAT and the sales. So we need to take that total to the general ledger, and we see the output VAT, which has a reference of B6 from, I got that from the previous month's trial balance, the Folio. Now the question is, why did we credit output VAT? This entry is on the right hand side, the credit side. Why did we put the entry on the right hand side? And you know the answer, and I know the answer. We need to apply the rules, the accounting rules. Output VAT. If I categorize output VAT, it's a liability. We owe this amount of money to the revenue services. Output VAT, we are liable to pay the revenue service that amount. A VAT return is done at least every 2 months in the country I am in. If there's an increase in liability from these credit sales, there is an increase in output VAT, tax that we are collecting on behalf of the revenue services. If the liability has increased, the entry must go on the credit side. The date is the last day of the month, 2024 February. The contra account to output VAT is debtors control. Where did I get the information from? Debtors journal number 1, and there's the amount. The entry was put on the credit side. Why? The output VAT liability increased due to the fact that we made sales. So there you go. There's another account done in the general ledger. All we have to do to finish posting to the general ledger is the sales column. We now need to take the information from the sales column and we need to post it to the general ledger. There's the Folio, nominal account number 2. Why did we go and credit this transaction? And once again, I applied the rules. Sales is income. There it is. There's an increase in income due to sales. An increase in income. The account must get credited. There's the date, end of the month, because it has its own column. We take the total to the general ledger. Under details, the name of the contra account, debtors control. Where did we get the information? From the debtors journal. And what was the amount? The amount was the total of the column, 36,060 and 87. So now the sales column in the debtors journal it has been posted to the general ledger. There we go. Why was it on the credit side? Because the rule says an increase in income, the account must get credited. So sales was credited. Now I'm going to do the cost of sales account again. Cost of sales is an expense. The total of the cost of sales column is taken to the debit side of the cost of sales column, because at the point of sale, trading inventory is expensed, and we open up an account called cost of sales. This is very interesting actually. And we debit cost of sales because the rule says cost of sales is an expense. If an expense increases, the account must get debited. So on the debit side of cost of sales, we have an entry. And the contra account to cost of sales is trading inventory. So trading inventory was debited. Cost of sales was debited and trading inventory was credited. Now, ladies and gentlemen, this is the amazing thing with regard to accounting. The person that wrote all these rules, or the people, way back in time, to Pacioli. He was a monk that wrote a book, and he summarized accounting details, but that's way back in time. But what is amazing is here, after we've taken this information to the general ledger, just for February, I can say sales minus cost of sales will give me the gross profit for February. Very interesting. Later on, once we've drawn up a trial balance in later lessons and a couple of statements, I will do some analysis and interpretation of a sole proprietor, and then we can see how the business has fared. Very interesting. Just to summarize what we did in our accounting cycle, our bookkeeping cycle, we looked at some transactions, credit sales. We documented the credit sales, or I showed you what an invoice was, and we recorded this information in the debtors journal, and we posted to the general ledger accounts. I showed you a debtors account. Remember, we will do that. If you purchase that video, I will show you how to draw up the debtors ledger. There are the transactions we looked at. There's an invoice. From the invoice, we recorded the information in the debtors journal, and from the debtors journal we posted to the general ledger. Well done everyone, that was fantastic. And it's sunrise, no, sunset. Hopefully I haven't put you to sleep yet. Sleep is very important. Get some good sleep. Dream about collecting money from a debtor. Hopefully they pay you on time.
Bye everyone.
Caleb says cheers and good night. Thanks again everyone. Sweet dreams.
Bye everyone.
Hop onto the ship and let's sail on to the next lesson, the debtor's allowance journal. Cheers everyone.